Hello everyone, welcome to the 10 Investor channel. Markets have been doing very well. We've had a crazy breakout in the small cap index. We've had a very good breakout in the mid cap index, which means we have a very good opportunity to make money in the coming weeks, especially in the mid cap and small cap space. So with that in mind, I'm going to discuss 6 stocks, especially from the small cap space and a few from the mid cap space as well, which could be good for positional trading and also probably for investment as well. So let's get started with first stock from the pharma space, which is Glaxo Smithkline. So Glaxo is basically has been in a downtrend since 2021 December. It has been in a very long downtrend, more than 1 year, and this downtrend has been very steep. Right now, if you see, we've had this massive bearish candle here, and since then we've been in a very strong downtrend. And the stock has been respecting this trend line quite often, right? So we had this rejection over here, and finally we had a strong breakout this week. That was a strong bullish candle. Now, one tip that I want to give you is, after a very strong downtrend, if a stock forms a bullish candle on the weekly charts, that's probably a sign of that the downtrend is probably ended. Especially if there's volume spike, then definitely probably there's a high chance that this stock is probably consolidating going forward and it's entering probably a new uptrend, right? So that bullish candle over there probably was the first sign. Then second time we had this nice doji over here. If you see, we had a long wick, and then we again had a bullish candle. Then we had 3 kind of black rows, and now we have a strong breakout on this in the last week, which means Glaxo has probably completed this entire downtrend, and probably we're going to head higher from here. Now, if you see, we've had continuous lower highs and lower lows, and now for the first time we formed a high. Now CCA has crossed 100, and that's why this came in the CCI weekly scanner, and we also had good volumes, but latest strength is still not bullish yet. So this is probably preempting and excluding the conditional relative strength. Now, if you have been following me and if you are relying on CCA and RS, continue with that. You can completely ignore the stock. Only if you get comfortable knowing what trends are and how price action is, only then I would recommend you buying stocks like Glaxo when relative strength is not yet above 52-week moving average. So I just wanted to clarify that. So this is a solid 3-month breakout, and I think this should probably mark the end of the downtrend, and we are entering an uptrend in Glaxo for the next few weeks and months. Okay, so the stock is currently a good buy around 3090 levels. Stop loss is around that swing low over here. That weekly low over here is 1280, which is around 8%, and we're going to look for targets of 1800, which is somewhere around that level over there, right? So which brings us to 3.68 times the risk that we're taking. Now remember also, your position size need to be controlled. You cannot be taking a 50% position size in one stock just because I'm teaching you how to invest in stocks. You need to also understand that every stock that we discuss here for educational purpose is actually has a probability of going down also. So keep that in mind and invest in stocks and learn how to invest in stocks. So the second stock for today is Astrazeneca Pharma, which is also from the pharma space. Now this stock broke out much well before even Glaxo had a breakout. So we had a breakout somewhere here, nice move. But again, as I just said before, after a strong downtrend, if you see a bullish candle like this, which means the stock is probably completing the downtrend. Right now, we had massive multiple bullish candles over there, and then we had a strong consolidation. Again, we had some strong weeks of bullishness, and again, we're having a strong bullish candle over here. Overall, the volumes have been excellent in AstraZeneca, and this has been a strong consolidation since October, November of last year. So that's almost 6 months of consolidation, and probably we should head higher from here if we break out of the zone. Now, remember, AstraZeneca also has not performed since after the COVID crash. There was a run up, but it hasn't performed since then. Right, so the entire pharma space, especially companies or peers of Glaxo, AstraZeneca, you have to note these stocks because I think these stocks will outperform going forward. Also, CCI has been good as well and excellent volumes. So again, you can, if you want to really buy the stock, 3500 is probably the levels that you have to look at. Stop loss is around 3100, which is that swing low, which is around 11% stop, and we can look for targets of 4500 here, which is around 30% trends from here. Now, both these stocks are also good investment candidates. So if you want to really ride trends, you can allocate 5% of your portfolio and just let the trend tell you where the stock is going, and don't really mess up with the buying and selling. Just ride the trend. That's the best way to make money in markets. Okay, so that's the second stock. The third stock from the healthcare space or from the pharma space is again Zota Healthcare. Again, this company also has been in downtrend since Feb Jan of this year. It went up, then it kind of has been going down, and again after this strong move, we have been consolidating for the last many months. So since 1 year, the stock has been going sideways, and now we had some bullish candle over here, and again we're having a bullish candle here. So volume spikes have been there whenever there was a bullish green candle, and also CCA has crossed 100 after a long time. Rate of strength also is about to cross 100. Now again, this is a stock which was listed recently. It's an IPO stock. It's fundamentally not great like Astrazeneca or Glaxo, so do keep that in mind before investing in this. Okay, so again, you can enter the stock at 298, stop loss of 270. Now here I'm keeping stop loss somewhere around there, around here, around the weekly swing lows. Now if you are an investor, you should not keep your stop loss somewhere there, because probability of your stop loss getting hit is much higher here than the probability of stop loss getting hit here. So if you're an investor, or even if you're a positional trader, and if the stop loss is 10%, and if it's around the weekly swing low, it's much easier to ride a trend or be invested. Otherwise, small stop losses, you have to be really excellent in terms of discipline and in terms of picking stocks. If you're going to about 2%, 3% stop losses, I don't recommend that if you are still learning about markets, right? So yeah, you can look for targets of 375, which is somewhere around that resistance zone over there, right? So we can also head as here, the around levels of 370, which is the recent highs that the stock made, which brings us to a risk reward of 2.75 times the risk we're taking. So that's third stock. We have three more stocks for today. The fourth stock for today is Arvind Fashions. Again, this was one of the stocks that I covered recently, but the stop loss was hit. But I think now we've had a strong consolidation, strong breakout, trendline breakout here as well. Again, the stock also has been consolidating for the last 1 year, right? So if you see this beautiful consolidation for the last 1 year, and we're having some nice volume spikes here, and also some good green candles over here. So the downtrend is completely over, probably because we also broke out from this downtrend, and we are also crossing the previous pivot high, which means the stock is probably entering again a short-term to medium-term uptrend, and we can see some good outperformance from this stock in the next coming weeks and months. So CCAR is also looking good. So you can buy the stock at 296. Keep a stop loss of 260, which is again that swing low over there, which is around 12%. And we're going to look for targets of 370, which is around that highs over there, right? So recent highs that we made in 2022. So that's the fourth stock. Now again, remember these stocks can head much higher as well. Just because I mentioned targets of 370, I'm just trying to tell you where you should be looking forward if you want to be, if you're a position trader or swing trader, probably that's where you take profits. Otherwise, just try to hold on to them and they might head higher. The fifth stock today that we're discussing is Shankara Building. Again, one of the stocks, I expected it to break out. When this breakout happened here, I expected to head higher, but then the stock just consolidated just like Barbag did. And we've been going sideways for the last 1 year or so. And now we've had a nice, beautiful breakout after some 6 months of consolidation. Now, this is a monthly chart. So it's okay. You can also just analyze monthly charts and take some calls. It's up to you. But if you're interested, you can also look at daily charts. But this is a nice breakout that's happening this week. So we had some good volumes last month as well. And this month, already last week, we had some good volumes this week. Okay, so that's the fifth stock, and it's also fundamentally decent. It's not very bad. So you can buy the stock at current market price 767, stop loss of 680, which is somewhere around that lows over there. If you go to the daily chart, probably you'll see it much better. Targets of 1000, which is 30% from here, and that brings us to a risk reward of 2.7 times the risk we're taking. Okay, last stock for today is TPL Plastech. A very small company, around 380 crores. Again, we had a massive breakout here, inverted head and shoulders pattern. Now, whenever you see inverted head and shoulders pattern, especially a breakout with massive volumes, CCI crossing 100, oscillator strength is good. It's a very, very good buy from investment perspective. Remember, if you can catch stocks here, then you have multiple opportunities, especially to pyramid around those levels, and then you can hold the stock for much bigger gains. Just sometimes you have to wait for such long consolidations to be over, but eventually the stock will head higher and give you much higher returns if you're an investor. So if you're an investor, learn to catch stocks when they break out initially from a stage 1 base and entering stage 2. That's the best time to buy stocks. Okay, having said that, we are now also breaking out here from a 20-month long consolidation. Volumes have been good. Latest strength, CCA also have been very good. So you can buy the stock at current market price 43.45, stop loss of 39, which is somewhere around those levels. And we're looking for targets of 55, which is around 27% from here. Again, all these are positional trading picks or swing trading also if you want to do swing trade. But these are some excellent picks for the next coming weeks. Now, in case you want to form an investment portfolio, I discussed this last week. In the last week's video, you can check it out. Now, you can go through this. You first buy 5% of a stock, 5% of entire portfolio, and then you add more as and when the stock heads higher. So I don't want to explain this again, but you can go through the slide And I've also given an example here how to do it. Your first buy should be on the first breakout, and your second buy should be on the next breakout, which is the continuation breakout. So this is very important to understand, especially if you want to add a pyramid to your positions that you have taken. So these are the 6 stocks I want to discuss today. If you did like my analysis, don't forget to subscribe and like this video as well. Otherwise, I'm going to leave you here. Take care, stay safe, trade safe. Until I see you in another video. Bye-bye.